other students probably are as well. Um,
No, just don't make me look them.
well, no, I can't do that. All right, so let's start with, I started to kind of work through it myself a little bit here. We'll start with B. And one of the things that we have to do is we kind of have to, the charitable contribution amount, remember that is going to be, for tax purposes, is going to be limited to 10% of taxable income before the charitable contribution. So we kind of have to do a calculation to the side in order to figure out what that amount is.
Right.
Before we can actually figure out, before we can actually figure out exactly what the tax income is. So on this one, of course, we're going to start with book income, 92,000. So it includes capital losses of $3,000. Capital losses are not deductible at the corporate level. So we are, even though that reduced our book income, it's not going to reduce our taxable income. So we've got to add that back.
Right.
So we're going to add that 3,000. Okay. Now we've got this charitable contribution of $12,000 and restaurant meals expenses of $3,000. So the restaurant meals expense for 2022, we don't have to worry about it because these were expenses in a restaurant. They are fully deductible. That is a temporary change from the 50% deductibility of meals and of meals expenses, which will, I think in 2023, it comes back to 50%. So just kind of as an aside, in 2023, this is going to be an adjustment that we would have to, but in 2022, we don't have to do that. And that's what we're working with 2022 here. So our charitable contribution of $12,000, restaurant expenses, we don't have to do anything with. Right now, what we've got to do is figure out 10% of, am I doing this right? Let's see, 10% of the 12,000 is, I'm sorry, it's going to be limited to 10% of our AGI. So here's 95 times, let me see, hold on just a second, because I did this earlier and now I'm like, so this is good. You can see that I struggle with this as well. So let's see. Go ahead.
So we're adding the 92,000 to the loss, or adding the loss and the charitable contributions back in, puts us at 107,000.
Right, 107. That was the part I forgot. That back in. So
1,070 is what we're going to adjust.
So for tax purposes, this is where we have to kind of think, it's kind of mind bending a little bit. So for tax purposes, we would get a deduction of 10,700. For book purposes, we took 12,000. So we're going to have to figure, so we've got to take the difference between these two is our adjustment.
Okay,
so
1,300
is our difference here. So so we've got our 92,000, and then we added back the 3,000. And now we are, okay, so for tax purposes, it was 10,700, book purposes, 12,000. So because we have a larger deduction for book than for tax, we've got to add this back. And I think that's it. 5, 6. So I believe, let me double check here. Yeah, 96,300 is our tax income.
Okay, I made an adjustment for meals.
Okay. Yeah, and because it says, now you probably did that because in A, it says non-restaurant meals, and you made an adjustment there. But
Oh,
because these are restaurant meals, it's 100% deductible.
thank you.
Yep, they're trying to trip you up there. So that sounds like that's your difference there. Okay, so that's B. All right, so C, we add a couple other little elements here. So we start with our book income of 76,000. We've got municipal bond interest of $2,000. So that would have been included in book income, but it's not taxable for tax purposes. So we're going to make an adjustment for that one. We've got our charitable contribution of 5,000. I'm going to come back to the dividends because we've also got a charitable contribution carryover. So if we only had the 5,000, we would be fine. We wouldn't have to make any adjustment for that because that 5,000 is going to be less than 10% of our net income for tax purposes. But because we've got this charitable contribution carryover, now we've got an additional deduction for tax purposes that we don't have for book purposes. So we're going to add those two together. When we add those two together, the 13,000, now we are over the 10%. So we've got to figure out what that difference is. And then we've also got these dividends, the dividends received deduction. This is a 10% owned domestic corporation, so we would get a 50% dividends received deduction because of that ownership of those dividends. Okay, so all of these items actually are, we do have to make an adjustment for. So is there anything that I mentioned there that you hadn't considered?
No.
Before? I guess because I don't want to go through the whole thing if you're like, oh, I see what I did wrong.
No, because I guess my problem is with the dividend reduction.
The dividends received deduction? Yeah. Okay.
Yeah, so is that going to be a $3,500 adjustment?
It's going to be a $1,500 adjustment.
Oh.
Because they're going to get a deduction for the dividends received deduction for tax purposes, but they don't get that on their books, essentially. So it's actually going to reduce our taxable income. So if we take this 76,000 for book, right, and then we've got in this book income, the 76,000, that municipal bond interest would have been included here. So we're going to subtract it.
Right.
Here. We're going to have to do a separate calculation for the charitable contribution, the dividends received deduction. So that would be a deduction from taxable income. That the 1,500 would be a deduction from taxable income that would not have reduced our book income. So we've got 1,500. So we're subtracting that one as well. Think about that. And then we've got to figure out what our charitable contribution is. So let's do kind of a separate 76,000 here. We would subtract or add back, I'm sorry, the $5,000. And we would subtract the $2,000 from Muni. So this is the charity for the current year. Okay, and then, which gets us to 79,000. This is our, and then, so this is the amount that we're going to multiply by 10%.
Right.
7,900 then would be our limit. But for book purposes, we only took 5,000, but for tax purposes, we can take an extra $2,900.
Okay.
So we're also going to subtract 2,900 for our share, because we're going to just take the difference between the 5,000 and the 2,900. Because here we get to take a full, for tax purposes, we get to take a full 7,900. For book purposes, we could only take 5,000. So for tax purposes, it's going to reduce our taxable income over and above what our book income is. So if we do that, hopefully I did this right. Minus 2,900. Whoops. 76,000 minus 2,000 minus 2,900. 69,600 is our income for tax purposes.
Perfect.
Okay. So, and I know that the fact that it's, you know, the charity is kind of, we've got to add an extra step there in our thinking because we've got that carryover. Okay, and then the last one, so is it making sense?
Yes.
Okay. So the last one. We've got book income of 129,000, including municipal bond interest of 2,000, charitable contribution of 5,000, dividends of 7,000 from a 70% owned domestic corporation. That means we're going to get a 65% dividends received deduction here, and a capital loss carryover of 6,000 and a capital gain of 2,500 in the current year. So we're not going to be able to take all of this 6,000. It's going to be limited to what our capital gain is in the current year. So we're going to have a difference there. So if we start with 129 and then our municipal bond interest again of 2,000 minus that 5,000 is not going to cause a problem because, I mean, we look at our book income 129 and the adjustment of 5,000, it's not going to be anywhere near. So the 5,000 is not even going to be an adjustment in this particular problem. The dividends received deduction now of 70% domestic, so 7,000 times 65%.
4,550.
485.50.
Yes.
Or is it 48.50?
Oh, shoot. Hold on here.
So 7,000.
From 65.
45.50. Okay, so that dividends received deduction, hold on just a second, I gotta let some students in. I'm sorry. Whoops. Okay, so that dividends received deduction is 45.50 for that let's see, and then our capital loss carryover of 6,000. Now, we would not have taken that for book purposes, right? We would have just taken whatever the capital loss was last year for book purposes. This $2,500 capital gain, though, we would have taken. But for let's see, so actually, I don't think that's gonna have any. The 2,500 would be the difference. Only the capital gain in the current year
Right.
is gonna be the difference. So for book purposes, we would have recognized that 2,500, but for tax purposes, we would not be recognizing that 2,500. So
we add that back in.
yeah. So I think, let's see here. So we've got 129 minus 2,000 minus 4,550 minus 2,500, 119,950.
Wouldn't we add the capital gain back in?
No, because
We're using.
because we would be, for tax purposes, we're going to absorb that $2,500 capital gain with $2,500 of this loss carry forward. But we don't have that for book purposes. Yeah. Yeah.
Okay.
I know it's a lot of steps, and you kind of have to slow down and really think about it.
Right. Hopefully there won't be any of this on the comprehensive problems.
No, there isn't. The comprehensive problems are only individual taxes. So.
Oh, that's great news. Thank you.
Yep.
Awesome. Well, thank you so much for your time.
You are very welcome. Thanks for letting me record this. I'm going to put this up to help some of the other students as well, because I'm sure others are struggling as well.
All right. Thank you. Have a great day.
Yeah, you too. Bye-bye.
Bye-bye.